39 minutes ago. Bitcoin's hash rate remains stronger than ever in the face of crypto winter prices and sky-high difficulty. Despite the fact that Bitcoin miners are getting bare minimums in profits per petahash per second (PHS), and the myriad of headlines showing specific mining operations folding from the crypto winter, the network's total hash rate continues to chug along at close to 300 exahash per second (AS). With lower Bitcoin prices and the mining difficulty at an all-time high, the current trends have not pushed Bitcoin miners back in the least. Meanwhile, the next difficulty retarget scheduled to occur on or around October 23 shows another increase will take place. Bitcoin's hash rate remains high despite current obstacles. With less than 2 days left, it looks as though Bitcoin (BTC) miners will get another upward increase in terms of the network's difficulty. Currently, Bitcoin's difficulty is at an all-time high (ATH) at 35.61 trillion, and the next change is scheduled to happen in less than 2 days on or around October 23, 2022. Bitcoin's difficulty on October 21, 2022, is approximately 35.61 trillion. The retarget is scheduled for October 23, 2022, and current metrics estimate that the difficulty could rise by 4%. While the difficulty ATH makes it a lot more challenging for Bitcoin miners to find a block subsidy, miners still have a great deal of hash rate dedicated to the leading crypto assets network security. Today, CoinWarts.com statistics show BTC's total hash rate during the past hour has been between 290 to 315 AS. Bitcoin's hash rate is coasting along at 300 exahash per second AS on October 21, 2022. The network recently tapped an all-time high on October 11, 2022, reaching 325 exahash at block height 758,138. The metric is just below the October 11 total hash rate ATH recorded at block height 758,138. At that time, the total network hash rate reached a lifetime high at 325.11 AS. Current block times on Friday are less than the 10-minute average as well, as a few data points show the current block times today have been between 8:30 minutes to 9:35 minutes. Usually, when the 2016 blocks are found faster than the 10-minute average, the retarget date is less than 2 weeks. BTC, 1 United States dollar-hour chart on Friday, October 21, 2022. BTC prices are currently range-bound, hovering just above the $19,000 region, and more recently, prices slipped under the $19,000 region to a low of $18,157 per unit at the end of September. When this trend occurs, the blockchain network's mining difficulty will increase in order to make it tougher for miners to find a BTC block. Satoshi created the system this way, so block times would stay within a consistent 10-minute average. At the time of writing, the difficulty is estimated to rise between 4.03% to 4.6% higher than the current 35.61 trillion. The predicted percentage increase would hike BTC's mining difficulty up to the 37 trillion range. Currently, the largest mining pool today, Foundry USA, has an average of 63.34 AS dedicated to the BTC chain during the last 3 days. Foundry's hash rate is around 23.86% of the total network's computational power. Current 3-day statistics for Bitcoin BTC hash rate pool distribution. Below the top BTC mining pool, Foundry includes miners like Antpool 48.37 AS, F2 Pool 39.73 AS, Binance Pool 35.13 AS, and Via BTC 23.03 AS in terms of the top 5 hashers. There are currently 13 known mining pools dedicating hash rate to the BTC chain, and 12.09 AS, or 4.56% of the total network, is controlled by unknown miners. The record high hash rate comes at a time when a few large mining operations have been struggling with financial difficulties and bankruptcies. This week, the investment bank D.A. Davidson's market analyst, Chris Brendler, downgraded the shares of Argo Blockchain, Nasdaq, ARBK, and Core Scientific, Nasdaq, CORZ, to neutral. With the hash rate so high, a person simply observing Bitcoin's computational power would not be able to tell that some BTC miners are struggling. It may be the case that while a handful of BTC mining operations have faltered, larger operations are simply picking up their slack, their ASICs, and facilities for discounted prices.